Hi, everybody. Today we are here with Francis Hinojosa, broker owner of Thrive Financials. And this is Usman Mahmood and myself, Komal Usman from Sotheby's International Realty Canada. Today we're going to be talking about mortgages in the time of COVID. So, Francis, welcome.
Good morning. How are
Well,
you guys doing?
we are okay, one day at a time. How about you guys?
Same. You know what? I always find at this times it's like a sea of confusion. And what you have to do is you just have to take it step by step.
That's
It's like,
right.
it's like being thrown into the water. You just take it stroke by stroke and just go with the waves.
One day you guys were out on vacation somewhere, and the next thing, you come back and you're quarantined for the next 14 days.
Yeah.
I was going to say my experience was a little surreal when we left. I mean, I was like, going into the mall, buying my latte, like no care in the world. And we were down south and then everything broke loose. And when we came back, we came straight from the airport, straight home.
Yeah.
And we were in, as you guys know, we were in the house for 14 days. We stuck it out. So I'm glad that we did. And yesterday was my first day out. But it was just, again, being responsible. I think we all have to do our part during this time. And you know what? Just enjoy the space that you have around you that you've built. That's what I say, right?
Absolutely.
That's what we both do. We find people, their home, their sanctuary. So now's the time. Enjoy your sanctuary.
Absolutely. I think right now the most important thing is to stay safe and healthy. And that's the priority for everybody.
Yeah. But I mean, with mortgages right now, I mean, you guys can lead the way of what your clients want to know. I know there's like a million questions we're getting shot at the firm constantly, again, because there's a lot of confusion, a lot of stress going on. But what I remind clients is, you know what, there's always a solution out there. And we can always figure out things, and things will always come out on the other end of the positive. But the most important thing is, answering those questions, asking those questions, seeking those answers, and getting that clarity and figuring out the best solution for your unique scenario, because every scenario is absolutely different.
Absolutely.
That's very
Absolutely.
true. So, coming back to that, the most important question that everybody has on mind is, where is the mortgage industry going? Are the rates going up? Are they going down? What's happening? Where do you see this going, Francis?
Well, I mean, as most people probably know, if they're watching the interest rates of what's been happening out there, when this crisis first started, the rates just started going wild like a roller coaster. And you look at the two different interest rates that are out there, right? You have the variable interest rate, which is linked to the overnight rate, and that's when when as a client, if you hear in the news ever, Bank of Canada has dropped interest rates. That's where those interest rates will get impacted. It's the variable interest rate that's tied to the overnight rate. Okay. On the other side of it, you have the fixed interest rates. Now, those are linked into the bond markets. Okay, so again, whatever they get money invested in bonds, essentially, just say simplistically, they turn around and lenders lend that back out again. So when you see those spreads going down, I'll give you an idea. At the beginning of January, the spreads on those bonds were 1.6. Mm-hmm. Right now, they're teetering in the range of anywhere, the swings from as high as 0.7 to like 0.4. So we've seen a massive, massive drop in that. And that's happened predominantly because as people moved out of the stock market, they got to park that money somewhere, right? So everyone was going into the safe havens, pushing it into the bond market, bringing down those yields. Right now, we did see a swing in interest rates on the fixed side of things come back down, but we have seen most recently an increase to those fixed interest rates. And there's been some articles circulating, clients are getting confused, like, why are we hearing rates going down, but then the fixed rates are going up? To say it simplistically, it has to do with liquidity. Okay, so I mean, it's not a scary thing. Banks aren't running out of money tomorrow. Okay, but again, it's supply and demand. And I joke with some parents. They joke around. It's like, for those parents out there, Christmas time, there's that popular toy that's out there on the marketplace, and everyone wants it, and there's short supply. Well, the price starts to go up. Same sort of idea, simplistically, when it comes to fixed interest rates. Because, the banks now are just being prudent, looking at the risk levels, looking at their overall book. They want to ensure that they have sufficient liquidity there. So those prices have gone slightly up. Nothing to panic about. From a historical standpoint, fixed interest rates, even the variable as well, I'll get to that, are, lower than they were even in a year ago today. In 2019, beginning of the year, we saw fixed interest rates in the 5-year fixed teetering around 3.99. Those same rates today are around 3%. So they're amazing interest rates there at the end of the day. Variable, of course, has gone down. Everyone's heard that the Bank of Canada has reduced the rate 3 times. The prime lending rate has dropped now as low as its prime is sitting at, with most major institutions at 2.45. So, what we're advising on the variable rate side, if you are a client with a variable rate mortgage today, and you have, some of them were deeply discounted in the past. So clients were getting, prime -1, prime minus 0.75. I mean, you could do the math. Some clients are even today paying 1.45 on their mortgage.
Yeah.
That's amazing. I would just leave that alone. And because, in a lot of the circumstances, if your payments are staying the same, it just means that more of your payments going to principal and paying it down faster, and you're paying a lot less interest. So I would leave those status quo.
Okay.
If you're getting a new mortgage today, at our firm, we like to find holistic solutions for our clients. So yes, rate is very important. What's even more important is the strategy of the mortgage. So not a one size fits all, but if you are looking at a mortgage today, you can take some volatility. You may still want to consider a variable rate at this point, and wait until that sort of demand and that steam comes out of the marketplace. We saw that happen with the financial crisis in 2008 when I was around. You saw the interest rates roller coaster dip extremely down. There was liquidity, right? So it kind of had that easing up. And then once things settled down, you saw a bit more easing in the interest rates as well.
So, on that topic, so how are banks handling, like, some people who have bought their homes at the start of the year and they were pre-approved and now it's time for closing, but they may have potentially lost their jobs right now? How are some of the banks handling that, and how is that financing happening for them?
Well, again, case by case, lender by lender, but most of them, again, are being very client focused and client friendly on this, considering the circumstances. Most of them have adopted a policy right now. If those applications were done and committed prior to March 25th, and as long as they fund by September 30th, and the client had the job, obviously, at that point, they will still honor that commitment. Now, some lenders might want a bit more information depending on the industry that the individual's in. Like, we had one situation at our firm that it was actually a stewardess with Air Canada, and they were approved prior to, but they were laid off, obviously, what's going on. But we know that that is a strong industry, that when things go back and call it the new norm, they're going to be back up and running with the tenure that they have. So we felt comfortable and prudent, and the lender did as well, to continue with that application. But anyone that has, any of your clients that have an approval that are leading up to closing, I would say this is a time that you want to really have that close connection with your provider, whether it be your bank or your mortgage broker. Make sure that you're following up with them, even if they're not following up with you. I'm sure everything's fine, but it doesn't hurt to call them up and say, are we still good? Are we still closing? Have conditions been met? Just so there's no surprises down the road.
Yeah, and in the same thing, some people, okay, they lost their job, but there are many business owners as well. Like, business is done for some, especially in the vacation industry. People who have gift shops in Niagara, for example. Like, how would that come into play for that situation?
In those situations, same thing. Common sense prevails. In times like these, I find that we really go back, instead of sort of like a ratio type systematic rules-based lending, there's a lot more common sense that comes into play. So, if it is a well-established big restaurant, let's say, that someone's owned, that has roots in the community, that may be closed right now, but maybe they're doing measures around that, like doing takeout or doing other services, or they have great fallback in the application as well. Lower loan to values, good asset portfolios that they can rely on. We remind clients that, yes, we're in unprecedented times, but really we're not at the point where, all hope is lost and there's not options that are out there. It's, making sure that your clients are sitting down with a mortgage broker, with a professional that understands lending, that has experience, that they can talk through the application and, again, figure out the best solution. Correct. And ensure that that broker has the selection of different lenders to go to.
Turning to tier 2 as well for these solutions?
Sorry, can you say that again?
Are you turning to tier two lenders as well, like B lenders for some solutions as well? Are they?
We're turning to all lenders and all solutions, but that's the same as we've always done, right?
Okay.
Yeah, there's tons of solutions out there, tons of lenders, but again, yeah, I'm going to be a little biased. That's the benefit of working with a mortgage broker
Yeah.
and a professional, because they're going to have the different options. And especially in times like today where there's so much confusion, I feel it's even more prevalent to work with a professional, work with a mortgage broker, because they're going to understand which lenders have which policies, who can actually do what, and really guide you through this tumultuous times to get you on the right path.
Yeah.
Let me ask you another question related to the current situation. Are you seeing any lenders doing reappraisals of properties as a result of what has transpired? It might be a little too early to tell, but yeah, that could be something that might be coming up given.
I have not seen anything of that. I haven't even heard of any conversations of them doing any reappraisals as of yet, or any concerns. I don't think that would necessarily happen.
Okay.
Yeah.
You know, and unless we absolutely hear of, you know, a dramatic drop in values in properties. But like you said,
Haven't seen anything.
we haven't seen anything. And let's be honest, as you both know, before, you know, this the COVID came to play and everything shut down, the real estate market was super hot. It was like a bomb that, you know, it was just sizzling, waiting to absolutely explode. I still feel that the demand is still out there, but a lot of people are just taking this time to sit back, which is, in my opinion, is quite all right.
That's right.
I don't think, you know, if now's not the time to be rushing out. I think we need to let the water settle a little bit, see the lay of the land, right? And
Absolutely.
then make that decision to move forward. But I feel still the demand was still out there prior to this, and I still think there is. According to most of the statistics out there, Canada in general already had a 20% housing shortage.
Yeah.
Yeah.
Yeah. There you go.
So I remember that appraisals, I remember having a chat with you that appraisals are not going inside houses right now, and they're doing FaceTime calls or Skype calls. Is that affecting the appraised value? Are they being appraised too high, too low? Especially such a drastic shift in the market, right? The value overall.
I mean, let's be honest, the appraisers are doing their job, which I respect. So, you know, a lot of the times they are prudent, right? And they do keep up with the trends, right? Because they want to somehow, in the evaluation of the property, they're going to put a buffer in there if it's a hot market or if it's a slow market. So in times like this, I would have to say, yes, they're being a bit conservative, but I'm finding most properties are coming in bang on. If a client was purchasing, it's coming in on value.
Okay.
So, you know, again, like, you know, your clients, you know, when you sell a property, if they're buying overpriced, if they're buying at market value, they're coming in at market value. But the appraisals are quite interesting. I mean, the one good thing that I've seen over the last 2 weeks that's come out of this in the industry and in the banking industry is how fast now that we've adapted to technology, and how thankful I am that technology is there. Like, for example, we're doing a Zoom call here. I've done tons of Zoom calls, and how everything's going to electronic, how everything's going to virtual, which is actually speeding up the process. So for example, we had 2 appraisals done in my own portfolio earlier this week. They got done in half the time than they normally do. So a lot faster. Here's how the new process works, which I think is quite ingenious with technology. So in the past, the appraiser would call up the seller of the property, or if you're refinancing, the owners of the property, and make an appointment to actually physically come in, maybe, you know, half an hour tops, to walk around the property.
Yeah.
The new process now that's been mandated by the Appraisal Association is they will contact the sellers or contact the owners of the property, and they'll do a virtual tour. So through FaceTime, through Zoom, through Skype, and you as the owner will walk them through the property. So it's, take me to the kitchen. Now take me downstairs, show me the furnace room, show me the panel. And they're recording this, inspection, and they're using that and attaching it to the report and the evaluation that they provide back to the bank.
There you go.
Very
There you
good.
go.
Very good.
You know,
Interesting times, huh? Making it
Inter-
very
in-
efficient.
and I
yeah,
think it's pretty
interesting times.
sensitive here, right? So it's great because things still have to move at the end of the day. You know, that's
Yeah.
how it is.
Anyways, now to the most important question is the mortgage deferral. Tell us a little
Yes.
bit about that. I have a couple of questions. What the process is, if you can just touch on it a little bit, and then deferring your payments on multiple properties. That's
Okay. So I'm sure everyone knows out there, they've announced that the banks, most major institutions, actually all institutions, so major banks, I'm finding all the mortgage finance companies, your alternate lenders, your trust companies have all agreed to help consumers to get over this hump of what's going on.
Mhm.
So you can request deferrals up to 6 months on your mortgage right now. The way it's done is you have to call into the institution. Some institutions, if you go on their website, and you know what, Como, what we can do is I can share you a link, and on there has all the contact information that you can share to your consumers. Some lenders are phone calls. Some lenders are actually email addresses. But if your clients go onto any of their mortgage providers' website, they all have information on the COVID of how to contact them. When you do contact them, you make the request of how long you want to defer the mortgage payments. They may ask you some questions, obviously, because this deferral program, of course, is not free money. It
Yeah.
is a deferral. So you are eventually having to pay back this money, number one.
Yeah.
And number two, we want to make sure that's going to those that absolutely need it. There are a lot of Canadians out there that are still very fortunate. And again, with technology, are still earning their income and working from home. So they're not impacted from an income standpoint. But for those that are, they are allocating or allowing those payments to be deferred. The way it works is essentially, I mean, you're not making the mortgage payment. So that amount stays on top of your principal amount. So be cognizant of the fact that if you do make this decision to do this, number one, it's going to slow down, obviously, the repayment of your mortgage. Number two, because interest is accumulating on the mortgage, right? Because every payment you pay, right? Some goes to principal, some goes to interest, and it compounds downwards. In this case, because the amount is staying on top, it's interest upon interest for those 6 months' time.
Mm-hmm.
Now, it's not astronomical. And in those cases where it's absolutely needed, of course, it makes sense to do. But, you know, beware. I've had some conversations with some of my clients that maybe they have the rainy day fund to dip into. I'd strongly suggest do that instead of deferring your mortgage payment, because this way you're actually still saving money on your mortgage. And if things get tough, that's the other thing. The deferral right now is not going away. So it's not like you have to instantly apply today.
Okay.
So if you find that yourself today that you can afford your mortgage payments, but you know, you're worried maybe in a month or two down the road, if things continue on, I might not be able to, then I'm telling clients, you know what, let's touch base every couple of weeks and see how it's going, and then make that decision from there if you need to move ahead to defer the payments.
And what about if people own more than one property than their landlords? How are banks handling that?
Same thing.
Okay.
Exact same thing.
So
Okay.
they'll defer.
So they're going to have, go ahead.
They'll defer payments for, let's say, I own 3 properties, so and I'm not able to make payments, and my tenants are not paying me.
Right.
So I'm able to defer payments on all 3 properties.
Correct.
Okay.
Okay.
But again, remember, they're going to ask questions, right? So if they are rental properties, obviously that's going to be the question they're going to ask. Is the tenant paying? Do you still have income coming in? Right? If it's a situation of a cash flow issue and there's still the same income coming in prior to this, I mean, obviously, I'm sure you guys agree that's a whole different conversation to have.
Yeah.
Correct. Excellent.
Okay.
So one more thing related to this whole deferral program. Can you cancel it anytime? Let's say things do start getting better in the
Of
next
course.
months, even though you've signed up for, let's say, for the next 6 months, but you've decided that, hey, you know what, things are going to start turning around. Can I stop it and start paying my mortgage again?
Absolutely. And you know what? And that's great advice to do. Like if you find that you have a 6 months deferral, and let's go silver lining, let's say, you know, the country is healed. The world is healed in the next 2 weeks and we all go back to normal and the income's flowing in. I would strongly suggest that you call up your lender and continue paying your mortgage payment, because that's saving you money at the end of the day. Let's be honest. We all hate paying interest.
Yeah.
Right? That's why we want to ensure when we first set up that mortgage, we're getting not only the best product, but the best interest rate for our needs. So you don't want to slow down that progression of paying down your mortgage.
Got it.
And does this deferral affect your credit history? That's another rumor. Is it rumor? Is it true?
No, it does not affect your payment history at all.
Okay.
You know, there may be some misreporting. Again, I'm just speculating here because mortgage payments are reported to your credit report. You have to remember that these lenders, and that's the other thing when you call in, I'll tie this in, they are getting thousands upon thousands and thousands of phone calls and requests per day. I think I talked with one lender over the weekend. I mean, they had almost, I think to exaggerate, like 80,000 requests. It's astronomical.
Yeah.
And I mean, there's live people that it's not a computer system of being approved or declined. There are physical people that have to vet every single one. You may miss a deadline to skip a payment and might get, because a lot of these things are automatically generated to your credit report. It's possible that could happen, but don't fret. Like, it can be, everything can be fixed.
Okay.
We're obviously going to know as lenders down the road. And we saw this in 2008. So, you know, in 2010, if I was doing a mortgage application and I saw a blip in the client's sort of credit profile during that financial crisis, we're all well aware of what was going on at that time. So a lot of these things could be amended and fixed so your credit report is not decimated long term.
So it would be prudent to keep an eye on your credit report if you're doing this.
Absolutely. And it'd be prudent to keep an eye on your credit report at any given time, right? Like Equifax. And that would be my suggestion is, you know, those services like your Credit Karmas and those things are great to get a sort of simplistic gauge. But a lot of lenders, a lot of financial institutions now on their mobile app or their online banking have means that you can track your credit score and maintain it. Failing that, then I would just go direct to, you know, Equifax, which is the provider with almost every single institution and how we determine or look at credit histories. Go direct to them. You can monitor your credit score with Equifax.ca, and just keep track of it. Whether we're, you know, here today or even at any point in time in your life, your credit score really is king when you're getting a mortgage. That is number one.
Okay. Let me ask you something around refinancing, because all of a sudden this thing came down.
Yeah.
I mean, there were people who were thinking about refinancing their mortgages and things like that. What's your advice to people who were thinking of refinancing, you know, their real estate or their properties, if you will?
Depends on the purpose, but if your needs were there before, I don't think this should change your needs.
Okay.
If it was a refinance to, you know, I like to call it restructuring, right? So if you're looking at restructuring your financial situation and you were already in the process, you're thinking about this a couple of months before, I'd say right now, continue that thought process and it can still get done because everything can get done virtually. And you know what? It might be a good thing because it's going to improve your overall cash position or your cash flow.
Got it. Okay.
Do we have any other questions?
I think we've covered quite a bit of ground. From your perspective, Francis, any advice that you'd like to give? Perhaps something that we may not have covered so far.
You know what? If you have questions on your financial position, I think we've gone through sort of that 2-3 weeks settling right now and acceptance of what is happening in the world. But use this time to reach out to your mortgage broker or, you know, get a referral to talk to a mortgage broker and sit down and have those conversations and start planning, think about it. Like, this is not going to be forever. Right. We are going to get out of this. And I've seen enough over my 25 years of different recessions and financial meltdowns happen to know that eventually we come out at the other end and things continue on. So use this time and this opportunity right now to sit down and look at your overall financial portfolio and what your plans are moving forward, and treat your debt the same way as you would treat your financial portfolio. Have the conversation, because those conversations are free. They don't cost you any money. And you get free advice.
Absolutely. I think that is a great advice right there.
Yes.
Get free advice.
Excellent. I think that's it.
Thank you, Francis. Thank you so much for taking the time, and we look forward to having more chats with you soon.
You too.
Hopefully
have a great
topic in a different setup.
I know.
I know, different setup. Happy Friday to both of you.
Friday to you as well. Thank you very much again for your time.
Bye.
Thanks, guys. Bye.
Bye-bye.